we want to see how we can join stochastics, indicator and pin bar to confirm a turning point in forex trading. We have always been told that the trend is our friend. They have also advised us that we should sell high and buy low. We later found that the trend is our friend indeed, and that we must learn and master how to sell high in a downtrend and buy low in an uptrend. What I'm trying to highlight here is the point that we should not just sell high, but we should only sell high in a downtrend and buy low in an uptrend. So we are going to see how we can use stochastic indicators. Let us insert it here. We'll come here, pick indicators, then go to an oscillator. So pick an oscillator here that will go down to stochastic. That's the indicator. I always use default setting for any of my indicators. So this is the default setting of these parameters for stochastics. Okay. A very good indicator that indicates the overbought zone as well as oversold zone in the market. That is, it indicates the region where market is being overbought, that means overvalued, where buying is saturated, and also it indicates, like, these are from these regions. This particular region is the overbought region and this oversold region. Usually on a standard setting, the 75% is the beginning of overbought, while 25% is the oversold. 50% is the equilibrium, the standard. So from time to time, we look at our stochastics to determine which region are we in the market now. Are we in the overbought region or we are in an oversold region? Of course, oversold is only important when we are in an uptrend, because when we say oversold, then we like to buy. For instance, the trend that we have now currently on this daily chart is this is definitely an uptrend. Okay, this is an uptrend. We can easily determine an uptrend by using moving average indicator. We set the 200-day moving average. Let me give it color red. Okay, gives us, now we can see that the price is moving above this moving average, so that is clearly uptrend. So that's one of the ways of determining the trend that is in vogue. Another one is to use a trend line. You can also use trend line to determine the prevailing trend. So this is surely an uptrend. Another thing that we can use is the pivot point. We can insert pivot point indicators, a custom indicator, then let's pick auto pivot. So you can see now that the monthly pivot point, which is the most important pivot point on daily chart to indicate the direction of trend, you can see that the price is moving above this pivot point, the monthly pivot point. So obviously we are in an uptrend. Okay, so that is using when we are using this. Okay, let me clean the chart. Now, how do we use this to how do we use the stochastic indicator and to determine the trend, the direction of trading? What we have to do is we put the indicators, which is stochastic. It's fixed already. Now the trend is up here. What we are looking for an oversold region, because we want to sell, we want to buy low. This is definitely an uptrend, so we want to buy low. So we are waiting for a region. This is already, we are approaching oversold. Now if we are to reset this, we know that already we are maybe around 70%, 25% or 30%. So but definitely we are approaching oversold here. So we are waiting. Therefore, since we have crossed the 50% down, the next thing is to look for any reasonable signal. We can pick a signal on daily chart, and we can also go down to 4-hour chart. We slow down to 4 hour. If we switch to 4 hours chart, you can see the pattern that we have here. Already we have a bottom. This is a reversal pattern. Here, look at this candlestick. So this has already is an hammer. So it has given us a sign that can you see that now? Look at what is happening here. This vertical chart, vertical line. Put it here. You can see where, look at where this reversal pattern is formed. This candle formed exactly in the oversold region. Okay, so it formed in the oversold region. So that means we have a good signal now to buy. What are the signals? One, the oscillator, the stochastic indicator, has given us oversold signal, and then here we have a reversal pattern being formed. So how do we trade this kind of setup? All we have to do is to play our our buy order above this this candle, this we can call it hammer. Above this hammer, we place our buy order above this. This is the eye of the candle is 1.1157. So we are going to buy say 1.1167. That is 10 pips above it, or even 5 pips. 5 or 10 pips above the candle is okay. So you can just buy, and also we place our stop loss below it. The stop loss, since the low is 1.1131, so you can place our stop loss at 1.1121 or 1.1120, just 10 pips below that candle, and then we keep our trade on. Now you may want to ask me, if we place this trade, we know the entry point, we know the stop loss point, the stop loss price, entry price, and the stop loss price. What about the take profit price? Personally, I do not I'm a flexible trader. I try as much as possible to protect my profits. So what I do is I normally use a trailing stop instead of setting a rigid take profit. I use a trailing stop. Okay, if my stop loss is 50 pips, I use a trailing stop of 50 pips. My stop loss is 100 pips, I use a trailing stop of 100 pips. So by so doing, I always find myself in profit. So again, before we stop this video, we have looked at how we can use stochastic indicator and a reversal pattern to to buy low in an uptrend or sell high in a downtrend. And the typical example that we have just observed here is this situation, Euro-USD, which is profoundly in an uptrend. It has been in an uptrend. Obviously, you can see this is higher lows. When you see formation of higher lows, that clearly indicates uptrend, higher lows and higher high. So that is an uptrend. So what we are looking for is the dip, appropriate dip at which we can buy the pair and join the trend, so that it can be profitable for us. Now we see now that this is going down, and it is very close to the oversold region. We are looking for a pattern to buy. So what we do is we switch from daily down to 4 hours. So in 4 hours we saw the pattern here, this candle here, which is a reversal signal, and then we have seen a crossover here. So these two guys, the candle and let me place the line again, this candle here and the stochastic indicator, they are in confluence. There's a confluence between what the two of them are saying. So all we do is, since there is a crossover here and there's a breakout above this reversal candle, then we place our trade and we ride the trend, which is an uptrend. An important note is that we have the entry point about 5 or 10 pips above this candle, which is setup candle, and we place our stop loss at about 5 or 10 pips below it. Then we do not have specific take profit price. Or what we do is we open our take profit by using the trailing stop. Okay, so when we open the trailing stop, we can use 50 pips. The stop loss is 50 pips, and we can use 100 pips. Our stop loss is 100 pips. So that is all about this setup for today. Thank you very much. Hope to see you in my next video.